Good afternoon. My name is Julia Coakley and I'm Head of Operations at the MGAA, and I'd like to welcome you to our webinar today, which is being hosted by AM Best. Before I introduce our presenters, I'd like to run through a few housekeeping points. Please ensure that your microphones and cameras are off. If you'd like to ask a question, please use the chat button at the bottom of your screen, which will be answered at the end of the presentation. If we run out of time and don't have an opportunity to put your questions to our speakers, our presenters will be happy to pick this up post-event. Any commercial or pricing related questions cannot be dealt with while Mahesh is on the call due to compliance stipulations. However, Mahesh may drop off the call in order that they can be asked, or they will be answered post-event by AM Best. This presentation is accredited for the CPD points if relevant to your ongoing professional development. The video will be available on our website and uploaded to our MGAA YouTube channel. We will provide a copy of the slide deck post-event. And finally, please take time to respond to our feedback survey, which will be issued after this webinar. This does enable us to deliver the best quality events to our membership. So today's webinar, AM Best, will be discussing the DUAE initiative. So I'd like to introduce Nick Charteris-Black, Mahesh Mistry and William Mills. So Nick, if I might pass over to you.
Yes, indeed. Thank you, Julia, for the introduction, and thank you obviously for the opportunity to be with your association today. We really appreciate that. The majority of this presentation is going to be delivered by my colleague Mahesh. Mahesh works in our global criteria group, which is the sort of internal body responsible for developing new criteria for rating and assessment services. And my close colleague William Mills isn't going to be part of the formal presentation, but William is very involved in the many stakeholder discussions we've had regarding this this new service, and will be a key point of contact certainly in London going forward. So just a couple of words from me. If we could just move on, Julia, we'll bypass the disclaimers. So a couple of words about AM Best, particularly in this context. Just a reminder, I know many of you will be familiar with us as a credit rating agency. You may not know that we are only involved in the insurance sector. So I guess by definition, specialist credit rating agency. So I'd like to feel that if any of the credit rating agencies were going to develop this kind of service, we would be particularly well placed to do so, given our sort of deep sector specialism. Ratings, credit ratings are based on a single global methodology, with a few exceptions, and that is the practice that we're adopting also with this assessment service. So the methodology that was released for consultation, which Mahesh is going to take you through in more detail, will apply once launched, will apply on a global basis. The current position is that we put it out for consultation in March. Formal consultation period has closed in May, but we still very much appreciate any feedback, and when we go live, as I say, it will be a global approach wherever we're performing the assessment service. AM Best operates on what's known as the issuer pays business model, which again has some relevance to this discussion. The terminology issuer pays is really derived from the capital markets, and it relates to the issuer of a financial instrument, normally a debt instrument. Not particularly relevant to us. We are involved in the rating of debt, but it's more relevant to the other agencies, and that's really where the expression comes from. The alternative business model is the user pays. So the user pay in this context could be a broker, a policyholder, or indeed a capital provider. But the reason I'm mentioning this is we will be adopting a similar business model for this service. So in effect, that means that it would be the MGA or the DUAE who would be paying for the service. And finally, we are regulated in the UK by the FCA since Brexit. And the FCA they've been tracking this as well. They've got sort of two angles to their interest. One, because they are obviously regulating us and our activity, and also because of their own involvement in the in conduct in relation to MGAs. So we're having a bit of an ongoing dialogue with the FCA as well as part of this process. So we just move on to the next slide. I just wanted to kind of address up front maybe one question you had as to why are we introducing the service now. I would say it's been something of a slow burn. It's something we've been thinking about for quite a while, but certainly I don't need to say to this audience the increasing role of MGAs in the insurance, the value chain, distribution chain, whichever expression you'd like to use. And that's something that certainly we've observed, and obviously particularly in relation to rated insurers and reinsurers. So in our core credit rating activity, we have certainly noted the increase in MGAs in terms of distribution. And in many ways, if nothing else, this initiative will help us understand better the role of MGAs in its many forms in the distribution chain, which is important to us in the credit rating process. The final 2 points, it gives us an opportunity to broaden our service offering within our chosen sector. We have no plans to move into any other sector beyond insurance, so that constrains our own activities, but this does give us an opportunity to do something slightly different from pure credit ratings. And finally, it supports our purpose. I guess every organisation needs a purpose these days, and our purpose is to be a constructive force in the insurance sector. And I think, again, in this context, and certainly others said this back to us, anything that helps supports, develops, improves standards is a good initiative. So that's just a little bit of a brief introduction, as I say, as to why we're doing it now. And with that, I will pass over to Mahesh, who, as I said earlier on, has been very deeply involved in the development of the criteria, working as part of a global group. So with that, Mahesh, I will pass to you.
Okay, thank you very much, Nick, and good afternoon to all. So during the course of the presentation that I'm going to give, it's going to last around 30 minutes, and I will be covering, say, the methodology components that we're going to go through as a result of this new initiative, but we'll also take you through the process that DUAE has to go through with AM Best as well. So if we just move on to the next slide. So basically, you know, given the audience we have here today, this is just some standard information that we have, so there's nothing I'd say too enlightening here. But we have a definition at AM Best that, as what we defined as a delegated underwriting authority enterprise, is a third-party entity that is appointed by an insurer or a reinsurer through contractual agreements to perform underwriting, claims handling, or other administrative functions on behalf of their carrier partners. And I'm sure you're all aware, but more of a note is that it's not just about the binding coverage, underwriting and pricing side. There's the claim settlement. Some have, you know, the appointed retail agents as well coming through within the models that we look at, and we also acknowledge that they have access to specialised business as well. So we know that the DUAE manages all or part of the insurance business of an insurer and acts as an agent for the insurer, either working as an intermediary between the insurers and the agents and the insureds. So in the next slide, it's just giving you what we are capturing under that DUAE mandate. As Nick mentioned earlier, this is a global initiative, so it's not just restricted, say, to our US or UK markets. This is something that we are offering across the world. And in order to encompass the variety of companies that are under the DUAE, there are various terms used. So in the US, they use program administrators a lot. In, say, Australia, it's underwriting agencies. So all of these, different types of DUAEs fall under the remit that we have here under our methodology. There is, say, an exception, and some have asked whether we would put assessments on third-party administrators, but that is not part of the remit at this point in time. They're not taking any of that underwriting authority here. So this is what's covered here. In the next slide is what we are defining. So we're calling the DUAE a performance assessment, and it's essentially the relative, say, a measurement of the relative ability of an enterprise to perform services on behalf of its business partners. And this performance is done of a number of key components which are assessed, and the aggregation of these points gives us that overall entity's performance assessment score on it. In the next slide. So I think this one is very important, and we've had a number of questions and comments during the consultation period, more about the processes that DUAE has to go through with AM Best on this new initiative. So on the right hand side, you'll see the sequence of events that we have to go through, and I'll take you through this. So when a DUAE engages with AM Best, first they're going to engage with our business development team. It will be Nick or William, and then basically the details are passed over to the analytical function. Then what the analysts will do is that they'll reach out to the DUAE, and they'll essentially set up a meeting with the DUAE. And for that meeting, they'll create a bespoke agenda which will run through the key components that AM Best will want to discuss with the organisation, and we'll also send what we call an information request, and that will be, say, a standard template, an Excel file with all the important components that we need for our analysis. So that's two, say, documents that we will send. One is the information request and the agenda items, which will form, say, the basis for the discussions that we'll have with management. Once that has been sent to the client, it's normally around 6 weeks prior to the meeting. Sometimes it can be more subject to the company, how quickly they want to move, how quickly they can get the information ready for us. And then we'll have a meeting, and that meeting is what we call, say, a management meeting. So it's a meeting with the senior management of the DUAE, and we want to discuss in detail all of those components of the agenda, and we'll come on as we go through the exercise to take you through what these components are. And in essence, the DUAE will need to prepare information for us. We'd want that beforehand at the meeting so that we can digest that information and make best use of the time that we have with senior management. The management meeting, subject to the size and complexity of the DUAE, could be anything from, say, half a day to a full day's meeting with them. Then once that meeting has taken place, the analysts, of which there'll be at least 2 analysts attending the meeting, will come back and do all of the analytical work. So they'll go through the 5 components, which I'll come on to, and they'll go through the analysis. If there's any further questions, they'll reach out to the DUAE. And then what happens is that they will form a PA, a performance assessment recommendation. So just prior to, say, the assessment committee, they'll then loop back with the DUAE to go through and highlight the strengths and weaknesses, make sure they have all the latest information and developments that that we need. And then that proposal is essentially presented to an assessment committee, and the assessment committee will say challenge, deliberate, and go through what the key components are in that forum. So, and that can be, say, upwards of 5 people who are knowledgeable and expert and have the expertise in terms of analysing DUAEs. And the way we're going to get the consistency going across, I know this was some of the questions that we had coming through, is that we've got a team that is set up, and they're going to be that team that are going to do the assessments and are going to be involved in the assessment committee regardless of where the location of the DUAEs are. And we've got representatives that are across all of our regional offices to do this. So they'll give it the due challenge and scrutiny that we need in order to ensure that the outcomes are consistent, and ultimately they'll vote on what the outcome should be, and a majority vote is decided in terms of what that is. So once an outcome has been reached, it is then communicated back to the DUAE. Normally that's just through a call and then through an email to provide the relevant information. And then the DUAE has, I'd say, 3 options on what they would like to do. So before we go into the options, I'll just say that the performance assessment outcome will have either a positive, stable or negative outlook also attached to the assessment, and that just indicates the direction of the performance assessment over the near term. And when I say near term, over the next, say, 36 months on it. So that's positive, stable or negative. But for any active performance assessments, we can also put these PAs under review as well. So if there's a transaction or something happening, we don't have all of the information at that point in time, then a performance assessment can be put under review until we gather that information from the DUAE, do the analysis, and then determine what is appropriate for that DUAE. So for the initial assessment, the DUAE has 3 options. They can either make the assessment public, they can keep the assessment private, or they can say, well, thank you very much, we've not met your expectations, and they can walk away from the process entirely. So in that last case, what that means is that you've gone through the process, and then basically there's nothing which will continue going forward. So the first option in terms of making it assessment, so for the initial assessment, you have the option of whether you want to make it public, private, or walk away from the process. That first assessment, if you choose to make it public, then the DUAE will be subject to AM Best's ongoing surveillance going forward. So we want to make sure that any public assessment that we have and any assessments that are made public will be on AM Best's website and accessible to anyone that has access to it. And basically, so you have the public assessment, and it will be subject to AM Best surveillance. So going forward, we want to make sure that these PAs are kept up to date at any given point in time. So if there are any changes, positively or negatively, we want that communicated to us, and then if necessary, it goes back to another assessment committee, and then we keep those assessments up to date at any given point in time. This is to ensure the credibility of the assessment that we have. Obviously, we don't want assessments to go stale. We want them to be current and relevant in the market. As a minimum, there will be an annual assessment that a company will have to go through. So that will be an annual management meeting with senior management, and the performance assessment gets updated or refreshed accordingly. And as I mentioned, at any point in time given the year, we can perform those interim assessments as well. The other option that a company can choose to have is to keep the assessment private. And for a private assessment, it's basically similar to a public assessment, apart from nothing's made public. So it's just a relationship between ourselves and the DUAE, and nothing is disseminated in the public domain. So there will be ongoing surveillance of that DUAE, but that will be all done and determined on a private basis. And some choose to go down that option to see how their assessment develops, and maybe they choose to make it public at any given point in time in the future. Now, there have been questions in terms of what will we make public as a rating agency. So essentially, for public performance assessments, there will be a press release, and it will be accompanied by an assessment report as well. So the press release will give an indication of what the outcome of the performance assessment is and the rationale behind it. And before that is released, say, to the market, we do allow the companies to review it for any material non-public information that could potentially be disclosed in those documents. Now, it is our opinion, so where we state an opinion, that is AM Best's opinion, and that cannot be changed, but we need to be conscious that information is guarded in the strictest confidence, and that we're not disseminating anything in those documents which is confidential to the company. In addition to that, we'll have, say, a full assessment report on the company, which will go into a lot more detail in terms of the assessment, the 5 components, and how we've come to a standing on those 5 components as well. A couple of final points on here is that there is say no termination period to the assessment, so it just continues until say indefinitely. And if a DUAE does decide to withdraw from the process at any time in the future, so if we've issued a public assessment on a DUAE and 4 years down the road, they decide, well, we want to pull out of the process in order to ensure the credibility for ourselves and for the market, we will put a final assessment on that DUAE before that withdrawal is enacted on it. So that's just some of the, say, themes in terms of the processes that we have. And I understand that there were quite a few questions on the consultation period. So if I've missed anything, feel free to ask at the end or follow up with us afterwards. In the next slide. So this is basically the 5 components that we have for the performance assessment. So going around in terms of importance, we have underwriting capabilities, governance and internal controls, financial condition, organisational talent, and depth and breadth of relationships. And I'll go through these 5 components in more detail. But essentially, what is the performance assessment trying to do? So this is distinctly different from credit ratings. And I know a lot of the time in our community, in other people's communication, they're referring to this as a rating rather than an assessment, but there is a distinct difference. In the insurance carrier world, where we're referring to ratings, it's basically we're assessing say the company's ability to meet policyholder or creditor obligations. In this, it's more about the DUAE's or the organisation entity's ability to service its business partners. So this is distinctly different to what we do on the insurance carrier side, and it should not be confused with it. That is a independent assessment to what we are doing here. So what's critical about this assessment is to understand how the DUAE has operated in the past and how is it going to operate in the future. So does it have a suitable business model today which is going to work appropriately prospectively going forward, which is why I say alignment of interests with business partners is a key component of the evaluation. So not just what the DUAE is doing, but how the interconnectedness works with its insurance carriers, with its agents and brokers to ensure it has an effectively utilised business model, which is why we need to understand the model that the company is approaching, i.e. the strategy and plans that it has in place. But we also need to consider the profile, size and complexity of the operation. Now, there has been questions to say, will larger MGAs get a better score? And I have to say, nowhere in our methodology do we say if you're bigger, you're going to get a better score. So I'd look at it in a way that it's understanding that structure and the model that the company or the DUAE has in place and whether that's going to work in the future in relation to the business partners that the company has and the model that it employs. Next slide, please. So this is just defining the actual components of the model in a little bit more detail. And basically, we have the 5 components and we have, say, different weights for those components. So underwriting capabilities, governance and internal controls, financial condition will get points up to 10 and they'll move in steps of 2. Organisational talent and depth of breadth of relationships will have points up to 5 and will move in steps of 1. Now, based on the consultation exercise that we've conducted, I would say the vast majority of organisations have agreed with these 5 core categories as these are the most important components for the evaluation. I would say there's been very few that have suggested anything otherwise. Maybe there was one participant that suggested claims management should be a separate section. There was another individual who suggested that organisational talent should be have the max point of 10 as well. And you know, while we can acknowledge that the people that are in the organisation are what's driving the business and the plans that the companies have, inherently part of these components are going to be interrelated with one another as well. So if you've got good management which is working well, that should shine through in underwriting capabilities and governance as well. So we believe that we've got the balance right based on the market feedback that we've got in terms of the DUA components and the weightings and scorings that we have. So what does it mean? So you're going to get there will be score ultimately out of 40, and a higher overall number of points will indicate the DUAE's relative ability to perform services on behalf of its insurance partners through effective business underwriting, strong financial condition, excellent access to business, high level of service, and strong business relationships and governance. Those that are scoring weaker in those categories will obviously have, say, weaker characteristics coming through. And the score, the assessment, the best PA for DUAEs, as you see at the bottom there, is just an aggregation, a summation of those 5 components there. So it's a score out of 40. In the next slide, it just goes into a little bit more detail in terms of where those boundaries are for the assessment. So we've got 5 PA scores running through from performance assessment 1 through to 5, and you'll have the assessment ranges there as well. So in order for a company to score exceptional, they will need a total score of, say, at least 34 out of 40 to get that. So the benchmarks, I would say, are high, and in order to reach that top level, they'll probably need to be extremely good or strong within most of those categories that are aligned in the that were mentioned in the previous slide. And you'll see the boundaries as you move down from, say, exceptional through to excellent down to weak there. Of note, the lowest a DUAE can get is actually 8, so that last category will run from essentially 8 to 12 for the weak segment there. So for each score that a DUA, we'll say the performance assessment score that a DUA would achieve, there is an associated symbol with a PA in addition to the assessment category definition, which is there as well, and we'll use that in our communication that we have to the market in our press release and report and those type of documents. In the next slide. So now we're going to run through the components of the assessment. So there's quite a lot of information contained here, and there's a lot in the methodology as well, but I'm just going to try and highlight, say, some of the key areas which we believe is of interest, and if there are any other themes that you'd like to discuss, we can follow up in the QA session or thereafter. The first thing to note is on the left-hand side, you'll see that for each category, we have a scoring. So for underwriting performance, you'll see it goes up in steps of 2 from 2 to 10. And for each one of those, we will have the associated assessment characteristics. And this loops back to that overall score. So you'll see over all 5 of the components, you have the points and you have the same assessment categories going through those 5 components. Now, as we know, underwriting is key to all DUAEs, which is why this is the first category here within the assessment. And we believe that the longevity of the models that the DUAE will use is essentially going to pivot around the underwriting capability. So it's not just looking at underwriting results, which is a component of the capability evaluation. It's more about understanding the underwriting philosophy and how that translates into the success of the DUAE's operation and what that means for the business partners that it does business with, whether it's the insurance carriers and the agents and brokers. Now, when we look at, say, DUAEs, they come in different shapes and sizes, different strategies. Some are very specialized. Other ones may be a lot larger with a lot of diversification operating in many markets. So we need to get to the finer details of the underwriting, what that means for the DUAEs, but what that means for the insurance carriers as well, and what that means for the agents and brokers. So we acknowledge that the underwriting authority that DUAEs have can vary by MGA, and some have more, say, flexibility in what they can do, and other ones are just following, say, the terms that are dictated by the insurers and reinsurers. So we want to understand the quality of that underwriting. So we'll look at not just results on a net basis that are applicable to the DUAE, but what business that they are generating for their insurance partners as well. So we want to look at a gross basis, how that works, what the performance has been in the past and what we expect the performance to be in the future. How does that relate to their applicable peer group or the markets that they are operating in, and other components as well, which are critically important here, are the commission structures that the DUAE adopts. Now, we are seeing an increasing focus on, say, more say structured commissions in place with, say, profit commissions, sliding scale commissions in place, which say to the DUAE that they've got a little bit more game, say a skin in the game, so that the fortunes of their underwriting or the business that they are bringing in is going to be dependent on the quality of business that they are actually generating for them and their business partners. So we'd want to do, when I say a deep dive, we want to get into the detail of how those ratios look, loss ratios, combined ratios, what it means for the DUAEs, what it means for the insurance carriers. And we appreciate that these could vary subject to the products that the DUAE is writing, the markets that they are operating in, and the partners that they're using on the insurance side, say their reserving approach that they're adopting as well, how those IBNRs are calculated. We've had several questions in terms of what level of detail are we going to go into on the underwriting side? Are we going to get the level of data that we need for it? And I think it is, I would say, it is going to be a challenge for us to a certain degree, given the way that how some of the contracts are structured, and the profitability of these contracts can be dependent on some of those commissions, but what the insurance or reinsurance carriers are doing themselves. But it's about getting a good structured understanding of how that model works, what that means for the DUAE, and what that means for the business, for their business partners, agents and brokers as well. So one of the items which we are looking to, say, expand upon a little bit more, I mean, it is there mentioned in criteria in terms of claims management services, but we're going to make broaden, say, our explanation on claims management. To some DUAEs, it's going to be quite important if they're managing claims in-house, because it could shave a few percentage points off their combined ratios if they're doing it well. But you know, if they're not doing it well, then it could be to the detriment of some of the business that they're bringing through as well. So while it's in there in the underwriting section, we are potentially looking to broaden that segment of it. In addition to having some greater clarity on commission structures as well, as we alluded to. And it's not just looking at the structures that are there or how the DUAE are benefiting from these structures, whether they're using top line commissions or sliding scale commissions, but how those commissions then are filtered through into the agents and broker channels that the DUAEs may also have. And that's not to say if a DUAE has, say, high commissions coming through, sometimes you have to pay for that. You have to pay high commissions for the expertise of the staff that one may have as well. And we would also appreciate that you know, some lines of business are very specialised, and we are going to see differences and nuances coming through, and that's something that we'll need to understand at the end of it. So in terms of other aspects of underwriting, we'll also want to say consider the data and analytics involved, the experience of the underwriting staff, whether there's any technology or need for any technology in the underwriting process. So it's not given. I think in for some classes of business, technology is important, but for other classes it may be less important. But we want to know whether technology is being used, what does that mean for pricing, claims handling, and other aspects of the operation, in addition to any, say, exceptions, limitations that a company may have, or the risk appetite they are writing their business to. So the next component is, again, it's an important one. It's about governance and internal controls, which is on the next slide. So here we go. So again, governance and internal controls is critically important to the management of DUAE. And from our perspective, we believe operational risk is a significant risk to a DUAE given the partners that the company has in place. So we want to understand how a DUAE is managing those relationships that they have. So again, alignments of interest is important. What are the insurance carriers doing? What are the agents, brokers doing? How does it all marry together in harmony with the DUAE? But also the systems, infrastructures and platforms that the company has in place. So are they getting information through bordereaux on a quarterly basis? What does that mean? Does that give the company enough time to react to market events, or does that give them enough time to react to any opportunities are there, or are they using more, say just-in-time technologies where you have platforms that are interfacing, say with the carriers and maybe the agents and brokers, whereby you're getting real-time information and one can sort of digest that information quickly and take appropriate actions on the on any products or markets that the DUAE has. The agents, the risk carriers will have access to that information and they can see what's going on. Maybe you have pricing built into that platform as well, which allows, say, reliable, speedy access to clients and those type of things as well. So systems infrastructure is critically important. And again, audits, management reports, we do require quite a bit of information from the DUAE, and we acknowledge that this information could be in a variety of forms. All I would say when it comes to, we want to get comfortable with the situation with a DUAE. So as a first step, we want to understand how the company is managing business themselves. But third-party audits reports may complement what a DUAE is currently doing, and that can highlight, say, important features. So all I would say, if there are any credible audits that one may have, then we can maybe give a lot more weight to what's being reported by a company. If there are any gaps or transparency issues, then we're likely to be a little bit more conservative in relation to that. So again, all companies will have policies and procedures, but we would want to know how they're being utilised and how effective they are within the company's operations. And we'll also look at, say, disaster recovery plans, key person risk. If there are, say, small DUAEs, family owned, well, what would happen if a person were to leave on there, and what they have in place. In addition to service measures, for example, complaints, or the level of how they're servicing their clients, any questionnaires and those type of things that are being generated there. So we have, say, binding contracts, which is contracts with the insurance carriers, and on the other side, looking at the contracts with the agents and brokers as well. With that, it's just, we wouldn't want to look at every single contract that is there, but to get a sample and understand what those features are there on those contracts. In addition to, if there's any use of TPAs, understanding what those relationships are and how they're managed. In the next slide, we'll look at, say, a financial condition, and I know I'm running short of time now, so I'm going to try and move swiftly on. So here we're trying to understand the stability of the operation of the DUAE or any related parties that the DUAE has. So whilst in the first component we'll look at the underwriting side, here we'd also want to take into consideration any other sources of income that the DUAE has, whether it's from fees, claims management, consultancy services, or anything else, and what stability that provides the company. So we'd also want to, say, look at the cash flow evaluation, any, say, leverage or coverage, or presence of borrowing that the DUAE may have, in addition to looking at those elements for any associated parent companies as well. So it's just getting an understanding of the financial strength of the DUAE and whether that's a concern or a benefit to the DUAE when we look at the related parties as well. We've also got an element of, say, participation of risk sharing. So we acknowledge in some markets they can actually bear some of that insurance risk, even though it may be small, and would want to know how that is essentially managed. In the next slide, we go through, say, organisational talent. So I'll be very quick on these next to. So it's done in relation to the size and complexity of the DUAE. So we acknowledge that some may be bigger DUAEs and they may have actuaries, claim managers, and have, say, other personnel there, say lots of IT personnel. But there may be, say, a small DUAE that may not need some of those because the complexity may be less. But we still want to understand what talent is there in the organisation, where it's going to last, what the expertise is. Has it been there in the past? What does it mean for the future if there are management changes there in terms of key person risk, and what they are putting in place to ensure the longevity of the model. So again, one size doesn't fit all. It is relative to the size and complexity of the DUAE and the needs that they require. So if it's more complex, they may need some of those functions within the operations, the actuaries and the claims managers. If it's a smaller organisation, it may well be better serviced by having third parties take some of those tasks. So we'll need to understand that. The last component there here is strength and breadth of relationships. On the next slide, sorry. And again, we understand it's critical to a DUAE's business model, the relationships that it has with its distribution partners. And that's not just the insurance carriers, but the agents and brokers as well. So we want to examine how long those partnerships have been in place, what is those strengths of the partnerships, what is that essentially bringing to the DUAE and its business partners, where those are based, whether you've got them in one market and they're specialised, or is it more diverse or geographical, and what the retention or stickiness of those clients are. So it's all going back to that, you know, as I explained at the beginning, what the business model is. Has it worked in the past? Is it going to work in the future in light of the market conditions that the DUAE is operating in? And I think we acknowledge that this has to be done on a case-by-case basis, because it can be different from one DUAE to the next, subject to the products and the profile of the company. The next slide will just indicate what we'll do from a management meeting agenda standpoint. So we would want to understand those 5 key components and discuss them, but we'd also want, say, some background on the company, understand the structure, the strategy, the market conditions that they are operating in. Then we'll go through those 5 components, and the analytical team at the end of the meeting will discuss about the timing of the assessment. Normally, I would say after the meeting, it could take up to 2 months to get that assessment, but that's subject to the quality of information, data that is provided, how quickly the companies can respond, the resources that we have at our end as well. So obviously we try to be as accommodating as possible and to move as swiftly as we can. But it is, say, subject to the DUAE circumstance as well. In the next slide is just to indicate that we can put assessments on new DUAE formations. So in the interest of time, I won't go through this, but essentially what we're trying to understand for new formations is what people does the company have in place, what business plans do they have, and what will be their ability to execute on those business plans. Have they done it before in the past? Can they do it again, say with a new approach, and will they be able to execute that in current market conditions? So sometimes, so the management team experience, knowledge is critically important, their connections as well, but also having those tied in contracts with, say, insurance carriers, agents and brokers would be critically important, which is why, you know, we want to look at, say, the management, their track record, what they've done in the past, and if that could be replicated into the future. So with that, that's a whirlwind tour of the DUAE, and the final slide is just to indicate here that it is a performance assessment. It is not a credit rating. We're looking to obviously provide more insight for the insurance market on DUAEs. Obviously, we do a very good job on the insurance carrier side, and we believe that this assessment is not here to replace what's currently there in the market, but should hopefully complement what's currently there. And we believe with the assessment and research that we do, we'd hope that the market will find that useful. The performance assessment is just a summation of the components, so we've tried to keep it relatively simple in terms of what we're after here. The actual comment period has now closed as of May 3rd, and in total we've probably received through our inbox over or close to 200 different comments and questions that have come through. So we're making our way through that, and we're finding them extremely valued, in addition to the separate discussions that we've had with the market, just to tighten up the criteria, the methodology that we have. And we're looking to provide a response to those comments over the coming months, in addition to, say, tightening up the criteria, because there's been some very useful feedback that received from the market. The other point that I would make is that we're conducting some beta testing at this point in time. This should refine the process a little bit further to ensure that we're not being too burdensome, say, on the DUAEs, and we understand what is or isn't going to be available, so that we can move forward as efficiently as possible. With that, I'll hand you back to Julia for some Q&A.
Sorry, thanks for that, Mahesh. Sorry, I'm just trying to get my video back on. Yeah, thank you for that. Very interesting. We do have some questions, so if I might put these to you now. I think we do have one we touched upon at the top of the meeting about any commercial or pricing related questions. You might need to step out. So if we cover a couple that I don't think are related to pricing and commercial, and then, as I say, I might ask you to step out, Mahesh, if I'm not. So the first question, please can you advise on how you propose to treat MGAs with a number of separate MGA units within this structure?
Yeah, so that's been one of the common questions that we have, is that how are we going to treat say a single independent MGA over those that are part of a wider group, and they may have 10 MGAs, say, under their structure. So we haven't necessarily come to a landing on that yet, but we're probably erring on the side that the actual benefit of the DUAE assessment is likely to be on a separate DUAE, say a legal DUAE basis. Because those partners that want to use this, if we go for, say, a group assessment, those separate DUAEs are going to be diluted in that assessment. So you may have there may be some good ones, there may be some weaker ones there. So we're of the opinion, although we still need to come to some landing on it, that it's going to be on a legal DUAE basis. However, if there are multiple DUAEs within a group that want to come for the assessment, then we'll look at ways in terms of an efficient way of carrying out that analytical exercise, because there will be components like the financial condition, maybe governance, which will overlap across some of those DUAEs, acknowledging that there'll be some independent elements, say, to the underwriting or the people or the relationships that they will have on a particular product or market.
Thanks, Mahesh. Okay, another question. How has the capacity market responded to this proposition?
So we've had discussions, and I'll probably bring Nick and William may want to highlight a few points here as well. We've had, we haven't talked to all of the insurance carriers out there, but from the ones that we have discussed the methodology with, have been very supportive from what we've seen of this assessment, and they believe that this is something which will add additional value to the market, or from their standpoint in terms of the tools that they are using for their assessment on DUAEs. Do you want to add anything, Nick?
No, I think that's very fair. I think the key point you made there, Mahesh, was that it is, and you made it during the presentation, it is complementary to I think existing due diligence, audit, etc., rather than in place of. And I think clearly the carriers themselves are watching closely as this evolves over time. But I think that's fair, William. You've had a number of these conversations.
Yeah, no, that's fair. Yeah, I think they've been generally positive about this. Yeah, I think that's fair.
I think this is the point perhaps where we might need to ask Mahesh to step out. So Do you want to actually? Let me just see if if that's okay, Mahesh.
That's perfectly fine. I mean, if there are any other analytical methodology type questions, I'm happy to follow up afterwards, or you can put them through to Nick and William and we can follow up if needs be. Otherwise, thank you for having me and thank you for your time.
Thank you, Mahesh.
Thanks, Mahesh.
Thanks.
Okay, so a question I have is regarding proportionality. Is the performance assessment only meant for the larger MGAs, and how can this proposition be affordable to small, medium MGAs?
Well, the first part, it's certainly designed, the service is designed for all shapes and sizes. And the second point is something that we're still giving some thought to. We certainly want to be able to provide the service to smaller MGAs, and we still need to kind of get to a pricing point where we can cover our costs, but it's still affordable for some of the smaller organisations. And we're not there yet at the moment, in part because we don't quite know how long, in terms of kind of time costs. We know how long elapsed time this will probably take, which Mahesh talked about. We're not quite sure yet in terms of how long what our time cost function will be, or what it should be, because I think inevitably we will spend longer to start with, but I don't want to reflect that through into the kind of standardized pricing model. So that's kind of where we're at the moment on the pricing.
Thank you for that. We have actually a couple more questions which allude to the same thing, that MGAs want to know the cost of this. So
yeah.
Will you be engaging with the smaller element of the MGA market?
We certainly will be. I mean, there was always the risk of disappointment with the drama of asking Mahesh to leave and perhaps not giving everybody the precise answer they were looking for. I mean, what I would say, just to add to the comments I made earlier, the structure of the pricing, there'll be an annual fee. We will have a pricing model that will have a kind of base fee that we will adjust based on size and complexity, possibly some other categories. And then that annual fee will be recurring. I mean, it's pretty similar to an audit fee, as in an external financial audit. So it'd be the same kind of level of fee, both the initial assessment and the subsequent reviews, on the basis that we're doing a similar amount of work. And we look to keep it fairly kind of level. There'll be a small inflationary increment. This is really following the pricing model we use for credit ratings. So in years where there is a significant amount of activity, because maybe some M&A activity or something we need to look into more closely, we don't seek to charge more in those years. We're trying to really give a stable cost, whatever that is, for future years when we're doing the review of the assessment.
When do you feel that you'll be in a position to share the costing model?
Really when we launch, and as hopefully it's been clear during this presentation, the service is not live yet, and we haven't got a precise public date. It'll be sometime after the 1st of September. So clearly we will know what the pricing structure is by that time, and if people want to be talking to us in advance of that, I mean, not today, but obviously in the lead up to launch, then we'll be able to by that time give an indication of what the pricing structure looks like.
Thank you. This might be, as you said before, Mahesh exiting, but do you see the proposition being attractive to current unrated insurers?
Unrated insurers. Not sure if I fully follow the question.
So you will have insurers that may or may not have a vested interest in the performance of the MGAs that they're providing capacity to, but they themselves might be unrated.
Yeah, they may be. I mean, we see the two as pretty separate in a way. I mean, currently for credit ratings where MGAs are a key part of the distribution model, we'll be having a look at the MGA relationship. And we don't really see that changing whether an MGA has itself goes for an assessment or not. So we see it as being pretty separate.
And do you have an indication of whether insurers are looking to ease their onboarding process, or when they're setting up agreements with their MGAs? And if they're not, where exactly are the complementary areas for MGAs?
William, do you fancy a stab at that one, given your carrier discussions?
Yes, I've had a number of carrier discussions, and it's sort of varied. I think they see it as complementary. They see it perhaps as an add-on, or it might actually evidence for them from a regulatory approach that they've done due diligence. They haven't been specific with us at the moment exactly what they could ease, but they do definitely see that there's value in having a third party look at that. The assessment could be of interest to them.
And I think, just to add, clearly, we're conscious of the kind of duplication that may result.
Mm-hmm. Yeah.
We're anxious that is avoided. That's not entirely in our gift at the moment. And I think, as I said earlier, it'll take time for kind of all stakeholders here, including carriers, to become familiar, with the service. And I guess in an ideal world, they will potentially relax some of their own, if that's the right word, I'm not sure really, but pull back a little bit on some of their own auditing and due diligence activity. But I think that's something that remains to be seen as the service and how it gets embedded in the market evolves over a period. And when I say period, I think that's going to be quite a long period of the next 2 to 3 years, hopefully.
Yeah. We've got about 2 minutes left before we have to wind up. So I've got one that hopefully is a relatively quick one, which is, when will this be live in ROI EEA?
So when will the service be live?
Yes. It'll
be live sometime towards the back end of this year, as I say, not before the 1st of September. And then, so we would expect, probably in an ideal world, to be conducting a limited number of assessments in the last quarter of this year, and then it would be sort of more engagement due into 2022.
Thank you. There was another question, which I think you've really touched upon, was whether going through this process, it will streamline the annual due diligence that capacity providers impose on their MGAs. But I think your response there was that it's a possibility going forward, but there is no indication at this stage that carriers would relax any of their own due diligence processes, whether it's onboarding or annual review.
Yeah, I think that's fair. But again, as I said, we clearly would like to hope that duplication, is avoided where there is duplication. It's something that's slightly different, obviously, from the carrier's due diligence.
Okay, thank you for that. Okay, well, there's no more questions at the moment, so I think it just remains for me to say thank you very much indeed to William, Nick and Mahesh for providing the presentation today and giving us an overview of plans to come. If there are any questions from our delegates, please feel free to submit your questions via the info@ email address, and we can forward those on to Nick, William and Mahesh. The slide deck will be available post-meeting, and that will be sent out to you as a delegate, and indeed it will be sent out to all registrants. But as I say, it remains for me to say thank you to everybody for joining us today. As I said at the top of the meeting, please complete the survey regarding feedback on this event, and I wish everyone a very good day. Thank you.
Thanks very much. Thank you.
Thank you. Thank you very much.